Recording in progress.
Hey there. How are you, Andre, Marco? Lovely to see you. My name is Jenny from Raise Ventures. Thanks very much for joining. We're just kind of getting set up and organized at the moment, but given a couple more minutes to see it's an online webinar that we're running today. So a couple more minutes on that late Thursday afternoon. Really appreciate you taking the time out to come along. If you want to drop in the chat whereabouts you're zooming in from, that'd be great. We're based over in Belfast in Northern Ireland.
Hi folks, I'm Eva Jane. I'm the community manager at Raise, and so I'm really interested in learning a wee bit more about angel investment and starting to build out the investor community. And it's going to be a key part of my role, so very excited for this afternoon.
We also have Dole here as well from the team. Michael.
Hi, good afternoon, everybody. Great to see you all, and yeah, looking forward to getting stuck into this.
Super. I'll share my screen and we'll get going, and we'll kind of pause during it to kind of make it a wee bit more interactive. And if you have any questions as well, I'll also have the chat open. Second, chat as well. All right. So yep, you're very welcome. We're running today the Angel Investing 101 session. It's a workshop series that we run for new and existing angels. Pop in the chat if you're new to angel investing, or if you've tried it before, or what you'd like to take out of today, and I'm sure we'll come back and make sure we cover everything. Just to give you a wee bit of background about who we are and what we're doing. Said we are Raise Ventures. We're based here in Belfast in Northern Ireland. We're primarily a 6-month startup accelerator program aimed to educate, inspire, and connect with startup founders. We work with them to help build products, commercialize, and look for investment. We do that on an advisory basis in return for 6% equity stakeholding to help them build the foundations and make them investor ready. From an investor view, what we do really is due diligence, so you don't have to. And at the end of our program, we help our startups connect with investors to make sure that they get connections, build conversations, put their best foot forward, and start their investment round. So today, really, what we're going to talk about is more kind of what angel investments is, the upsides and downsides of angel investments, what to look for, how does it fit into your overall investment portfolio, some tips and hints, how to get involved, and how to look for some good deal flow. By way of kind of introduction from myself, I'm Jenny Irvine. I'm one of the co-founders of Raise Ventures, but I'm also an angel investor. I've been angel investing now for about 10 years across a range of early stage companies. And the premise of Raise Ventures came from seeing some really, lots of startup pitches, but maybe not having the quality to connect them with the angel investors, and also the angel investor looking for good quality startups to invest into. So really kind of being on both sides of the table, it enables us to kind of give you a picture of kind of what to expect when thinking about angel investing. So what is it? It's a kind of an asset class where you're getting close to the startups that you're investing into. They have potential when they're early stage to grow, scale, and exit, and potential to make return. It's an asset class that can be high risk, but it can be high reward as well. As an angel investor, what you're doing is using your disposable income to invest, usually in exchange for shareholding in the company. So at our stage, when we're working with early stage startups, the founders normally own the whole company 100%. And what you're doing as an angel investor is buying a percentage equity holding from that company, being part of the company, being part of their journey as a shareholder, and then helping them exit out the other side for a return. The investor also bringing experience, contacts, expertise, knowledge to the table to help them on that journey, because quite often, particularly at our stage, they're a small team and they need the connections and advice to help them along the way.
Can I ask a question, Jenny?
Yes.
So in terms of that kind of earliest stage of the company when the angel investor comes in, is it almost automatic or assumed that they will be hands-on, or can some investors take like a more hands-off approach if they're perhaps interested in the industry but don't have that technical expertise?
Yeah, it's a really good question, especially when you're starting off and you're not quite sure how to be an angel investor. So there's a wide range of ways you can get involved, and you can be either both end of the spectrum, either really hands-on, really helping them, looking, to be their advisor, looking to help them from connections, looking to help them from their strategy perspective, right down to the other end of the scale, whereby it can be just potentially money into investment and sitting back and being more of a silent shareholder. In the scenario whereby it's more of a silent shareholder, you would expect somebody else to be in there, whether that's a management team or a board or other investors that are helping, because they still need the help at the strategic level. And then you're backing them just with the money and being able to sit back. So there's a range depending on the appetite of the angel investor, how they want to get involved. But we would recommend, if you want to be a silent investor, to make sure that somebody else in there looking after the business.
That's helpful, thank you.
I think another question or comment I was going to make as well is, I think, other investing. So if you're investing into property, or other asset classes, they can tell you that if you put your money in, you can expect X return over a certain period of time. And people promoting that investment often stand over it and say, this is what you will make if you invest. What has to be really stressed about angel investing is that you get none of those guarantees, none of that certainty. This is very different from other investment classes which have got more guaranteed returns.
Yep, no, thank you. That's really helpful. And we'll talk a bit more about how it fits into a portfolio and further on. So the benefits really, I mean, why I got involved, was interested in diversifying my portfolio and thought angel investing would be interesting. I wanted to pay it forward. I wanted to get involved with startups. I wanted to be part of the journey. I didn't have a startup idea myself, and I could see the benefit, the skills and expertise that I had, being able to add value to other companies and see the potential for the high return as well. Opportunity to pay it forward, use my expertise. I come from a commercial marketing background, so be able to come in and help them from a strategy and marketing background. Diversifying is really important. We'll come back to that later on. And learning, it's every day is school day. To being an angel investor, actually learning about new technologies, new businesses, the future of what's happening in the world, keeping your finger on the pulse. It's a great networking opportunity as well. You meet new people, particularly if you're coming from maybe a corporate background, or you're meeting enthusiastic, resilient, ambitious people in a new industry, which is really exciting. And one of the big plays here in the UK is the SEIS, EIS tax breaks. I'm going to talk a wee bit on this. Jump in the chat and tell me if you already know about it or not. If not, I'll just keep going. There's lots of information to be had on this, and some of this is kind of the key headlines. It's a wee bit text heavy, but that's because there's a few kind of rules and regulations around it. If you haven't heard about this tax scheme, it's a tax scheme from the UK government that helps encourage early investment into kind of high-risk businesses. And there's a couple of different parameters around that. Really early stage, 2 years old, less than 25 employees. An investor can invest up to 100,000 per year and receive 50% tax relief. Over the 2 years, or under 7 years old, they can invest up to $1 million and receive 30% tax relief, and those are both off the income tax. If that investment's held for 3 years or more and the company is sold, there's no tax on the growth in the value, and there's also no inheritance tax to pay. So there's a link there. I'll share this presentation afterwards, and just if you don't have any, we want more information, see Legals, and there's a range of other platforms out there that provide some tax advice if you're looking for it. But it's one of the kind of key benefits of investing in the UK companies.
It's also worth noting, see you guys, Marco, you're in Portugal. If you're a founder of a startup yourself, and you're hoping to raise investment from UK investors, you can, if you have a UK office or branch, which is someone who acts as your representative, who's able to sign contracts on behalf of the company, or if you have a semi-permanent address that you work out of, your company then can qualify for SEIS as long as it fits in with the wider UK rules, and you can then allow your UK investors to benefit from this tax scheme as well. So it's worth knowing if you're hoping to raise money from UK investors.
Thumbs up, thank you. Perfect. Well, we talked about all the benefits and the kind of good news about angel investing is we always have to talk about the risks. It is a high risk, high reward investment class, and it can take quite a long time to generate returns. The rule of thumb normally is investing in 1 out of 10, and your one company that you invest money into, potentially the returns on that to cover the potential losses or break evens of the rest. It's seen as high risk, high risk, high return, long term. So how do you mitigate that risk? Diversifying your portfolio of angel investments, that fact of being 1 in 10, get started and thinking about the type of companies that you want to invest into, thinking about the industries that you have expertise in that you can add value to. I have no experience in medical technology, so it's not a company that I would invest into, for example. Invest in what you know, look for good quality deal flow, and that was maybe one of the premises why we created Raise. There was lots of good sales pitches out there, but they may not have been good business pitches. So yeah, make sure to dig under the hood, do the due diligence, make sure there's good solid foundations, and it's not just a good sales guy or girl. Learn from others. So there's some great networks out there. We'll talk about them later. UK Business Angel Network. Do come to workshops like this, talk to others about how they've done it, how they've got started. And there's no questions, a silly question. I was having a chat to a potential new angel investor last week, and we're like, yeah, how did you get started? And I'm happy to share, a couple of hints and tips. That's what it's all about, because it's really hard when you're fresh and new to the whole thing. Be prepared. So particularly at this early stage, what we see is companies that have good product, good team, good early traction, looking to raise early stage investment from angel investors, particularly here in Northern Ireland, somewhere between 250 to 500,000 might be their first round. That'll only take them to a certain place in their business journey. It might help them find their first customers. It might help them build their first version of their product and cement the foundations of that product. But then to scale further, they need further funding. Quite often the angel investors will prepare to come and follow on. So whatever you put in this time, you might want to put in again and kind of build and grow that company. And be patient. It is a 10-year journey. I've been doing this for 10 years and still doing it and still enjoy it. And the last piece, only invest what you can afford to lose, because it is high risk and there is a high chance that you invest in the 9 and the 10 companies that don't make it, and the 1 in 10 will.
Another question from myself, Jenny, when you put an investment in initially at this early stage, how long can you expect that to continue on for until you say you get an exit or the founder exits and you get your return?
I think the stats do say between 5 and 7 years. It depends how early you do go in. Some of the companies that we've invested in have gone in fairly early, and that's why we're sort of 6, 7, 8, 9 years into that cycle. And particularly given COVID, I mean, nobody likes to talk about it. That's kind of added 2 years to all the investment cycles, unfortunately. But we were at an event a couple of weeks ago that there were angel investors talking about getting in and encouraging the founder to exit early. And particularly with the med tech sector, can be innovation happening that can be bought out quite quickly. So it depends on the sector of the quick returns. It's not as likely, and it's a 5, 7, 10-year approach. A bit like any of the big VCs or private equity funds that you would see in the markets. Their fund model is exactly the same as an angel investor model.
Yeah, and you have to stay in tight. You have to keep an eye on what they're doing and be involved. If they go for follow-on rounds, I'm not sure if we cover follow-on rounds, but they'll raise their initial friends and family or angel round you're involved in. Then they might have what's called a seed round. And then a Series A. At each of those points, more investment will be put into the company, and your shareholding will be diluted, will reduce your percentage of the company, but the company will be worth an awful lot more. Therefore, you're protected. Now, if it's a down round and the company isn't doing very well, that's where the risk comes, and you can lose, and you can find yourself owning less. But if you choose well and support as best as you can, the company keeps growing, then you can benefit. And then what often happens with angel investors, once you get to Series A, is a lot of VCs and big funds will buy you out. So take you off the cap table at a price which is often quite attractive to angels because you might get 2x, maybe 3, 4, 5x return on your money, which is a nice return over a relatively short period of time. But if you really like what they're doing and you want to follow on and put more money into it, then you can hold on tight for the ride.
So just you mentioned cap table there, so just for an understanding, that's the breakdown of shareholding within the company.
Exactly.
As we mentioned earlier, at the earliest stage, the founders own 100%, and the cap table is a capitalization. It shows who owns what, how much percentage they own of that company. As you join those founders and angel investor, you own a certain percentage of that company, and that's you become part of the cap table, and that just grows and grows as further investment goes into the company. Yeah. Any questions from? Drop them into the chat, or if you want to jump off, Andre or Americo, please do. I'll keep going. Maybe I'll have some questions at the end. So how does angel investing fit into your portfolio? I suppose this is a job in itself. When you're looking at your disposable funds, you're thinking about where's the best place to put it. Is it in the bank? Is it in property, stock market? The financial wealth advisor will look at all your options in terms of pensions, ISAs. They may even recommend some SEIS funds. Beyond that, you look at the more interesting asset class, Bitcoin, art, wine. There's lots of different places to put investment, and you have to understand yourselves how long you want the money in for, what risk you want to take. So is it short or medium or long term? Is it low or high risk? And diversify your portfolio accordingly. And as I said earlier, angel investing is long term, high risk, and that's where it sits. Rule of thumb, invest at the start a very small amount of your disposable funds, and be prepared to lose it all. And in general, business angels would invest normally between 10,000 up to 100,000, 200,000, depending on their appetite and ability to invest. Anything less than 10,000, Michael, probably sits down in the crowdfunding sector.
Yeah.
So the likes of Crowdcube, whereby you can come in and join lots of other investors at a small ticket size just to kind of try things out. Just can be a good place to start as well.
It is. It's a great place to learn about the investment process. Watching a startup, watching it grow, watching it how it uses the money, watching how it behaves, even understanding the administrative process of investing, of reclaiming tax reliefs, of doing it. And crowdfunding is really, really good place for doing that.
A question's come through there from Andre about, can angel investors earn a salary after the funding round has been made and work in the company? Really interesting question. At the earliest stage, quite often the founders don't have a lot of cash to pay advisors. We see it as being kind of pro bono as a result of you've invested into the company and trying to grow that company, and your shareholding is kind of your return. As funding rounds go on and the company starts to build their team, they will build their board, and you might have executive and non-executive directors as they start to build that board. And if you as an angel investor decide you want to be an executive or non-executive director, then that's the point that you might be thinking, this is going to be more of a commitment, this can be more of my time. Is this still going to be free, or is there a negotiation across the table whereby some of that funding could be used for a role as a non-executive or executive director? But it would have to be very tight in terms of what value the investors bring into the table, what's the role, and how that, it's an investment from the company into their board and as a result to have a commitment and to do work essentially, I suppose.
Yeah, I think also sometimes tax reliefs can be impacted. If you invest, you can't then get tax relief on the investment and take a salary, which can be complicated. But the great thing about angel investing over other forms is that it often also comes down to the relationship that you have with the founder and the other investors. And that's the great thing about angel investing in startups, are that
a bit of a community, and
you can do what works for both.
Yeah. But yes, we are not professional wealth manager or tax advisor, so please do make sure you do take advice as well from your own connections. Couple of hints and tips. When we're talking about that early stage again, that kind of 100% of the company, who takes what. So you're trying to find a fair valuation of the company, you're trying to buy a portion of that company at a fair valuation, and we recommend that angel investors take between 10 and 20% equity stake at this early stage, because that enables the company to have a percentage shareholding left for the incentivized founders and enough left for further follow-on investment that we've also mentioned. In terms of terminology, we talk about ordinary shares here. Make sure that they're an ordinary shares, which is on par. Everybody's on the same voting rights. Everybody's on the same documentation across the board as the founders and the shareholders. And the rationale here is the founders have to have enough equity to be incentivized to continue on this journey, because it is a 5 or 10 year journey. And as Michael said, everybody gets diluted on that journey. And back to Jane's question, there's definitely levels of involvement in terms of being a lead investor, right down to being a silent investor. What we see in investment rounds is one lead investor will come in and do due diligence, understand the company, ask the questions, look in all the dark corners, do negotiations, maybe level up the term sheet, and potentially take a board seat, right down to shareholder limited involvement. So we see a range of investors at different levels, and it's up to you to choose what you want to do when you're investing. So you've learned how to be an angel investor, what to look for, what the risks, what the benefits are. Now the time's come that you might want to think about what companies to invest into. So the startups that we see do well, there's a couple of things that we recommend. Look for a good team with a good technical product that has resilient and ambitious founders, because this is a long journey. They have a product that's going to scale and grow in a large customer market, so they're going to create a lot of sales and have that potential return with a good business model and good gross margins. At early stage, some market validation, so some customers saying yes, they would buy it or have already bought it, and some traction in terms of those connections, sales, partnerships, distribution, just showing that they're moving forward is really key. And on the other side of the table, to the SAIS I mentioned earlier, the company can get advanced assurance from HMRC and show that they are a high risk company in their early stage. And then when you come to invest in them, you will get the SAIS benefits. So they either be in the process of getting that advanced assurance or should have it when you're talking to them about investing into them. So yeah, how do you get involved? I guess, as mentioned earlier, talk to people, come along the different Pistons events online, in person, get involved with accelerators like ourselves, invest as part of a syndicate. So that's an analogy of people being heavily involved down to the silent investor can work quite well in a syndicate, because you're all working together and somebody takes the lead and everybody kind of plays a part, but some people don't need to be as active as others. Talked earlier about being an advisor, being a board member, just getting to know them before you invest, learn from crowdfunding sites, look for startups. It used to be that you had to go to in-person events, but as an investor you can get deals from many places. There's many online platforms, there's many events online, and there's many in-person events. So kind of select the ones that are interesting to you, due to geographic location, due to potentially industry, due to stage in terms of is it early stage or later stage, and follow those kind of events. And yeah, speak to your lawyer and accountant. They're always ears to the ground in terms of new and exciting businesses that they're helping. We're obviously going to talk about what we do. So at the end of the Accelerator, we do have pitch nights where we showcase our startups who've been through the program. Our next pitch night is on the 24th of November. It's in person and online. We also have an informal network of angels who invest in raise startups. They spread the risk, they share the due diligence, and really it's combined money, knowledge, and networks. And if that's of interest, happy to chat to anybody. There's a wide range of angel networks and places to go around the UK and Ireland. HBAN Ireland, Go Beyond Europe, GC Angels in Manchester, Dorset Angels in Dorset. the UK BAA I mentioned before, and the Enterprise Investment Scheme Association as well. So well worth checking those out. We have a range of startups looking for investment right now. Future Match, Mazi, CyberRisk, Broker IQ, and Diverse Talent across recruit tech, fintech, cyber, and insurance. All industry founders from a background of knowledge, expertise that are building solutions essentially to disrupt themselves or make their clients' life easier and better, more efficient, more cost effective, and as a result, in large markets, they're going to make a potentially high return. So yeah, key takeaways. Angel investing in early stage startups is high risk with potential high rewards. Get involved early, ask questions, network and connect, and start to look for deals in industries you know and like. If you'd like to join our event on the 24th of November, we're on Eventbrite, or you can scan the QR code. And if you'd like to find out more about our syndicate, please check out our website.
Question in there in the box now. So could you explain the difference between a syndicate and BA networks, please? That's from Andre.
Could you tell me what BA networks are on?
Business angel.
Business angel networks. Okay, gotcha. So a network of people, business angel network, like the UK Business Angels, you can be part of their network and learn. You can get access to their events, access to their resources, and but primarily they give you the advice, and primarily it's up to you to go and do the investing. So they're like an overarching body, I suppose, the UK BAA, but a syndicate's actually actively investing. There's a group of investors that got together to do a deal. So they're all putting money into the company, working together maybe to understand what the company is, do due diligence, do the legals, and support the company. So a syndicate's active, whereas a network's maybe just a community to be part of and learn from. That's the slight difference between the two. That helps. UK BAA is very active at the moment in terms of promoting angel investing, particularly angel investing for females and into female founders, and just leveling up in general across diversity. And they're active not just in London, but across the regions at the moment. So it's definitely worth checking out their website for events if you're looking for local events in the UK that you can pop into. Our pitch night in America is online and in person, hybrid. We're very excited. We're going to go to Cafe Present in Belfast and have our pictures in person, but we'll be live streaming to Zoom, so you can jump on and watch.
There's also regular flights from Portugal to Belfast and Dublin as well. So it'd be great to be in person.
Any other questions? There's a bit of a whistle stop tour. It's definitely something, you know, if you're interested in, take the first step and get started. Happy to, you know, pick up the Zoom call separately if there's any further questions. Get in touch. My email details are here, jenny@raise-ventures.com, and more than happy to kind of answer any more questions. Thanks so much, everybody, for joining our workshop today. Really appreciate it, and look forward to seeing everybody on the 24th of November.
Thank you. Cheers. Thanks a lot.
That is it, folks. Thanks, Andre. Thanks, America.